Hello friends, welcome to my new YouTube channel Sachin Education Hub in English. So friends, today we will discuss the difference between exchange traded funds and a mutual fund. The two terms are too similar with each other. You all know very well about that. You all know that the exchange traded funds and the mutual funds both are the investment vehicles that allow the investors to buy the diversified portfolio of the assets and get the higher return as well. You know these things clearly. But there are few differences in between these two terms which you have to understand in this video. And what are the differences between these two terms? So start with that point. Firstly, the base of difference is trading. Trading is the major difference between these two terms, because if we talk about exchange trade fund, then as like an individual stock, it is also traded on the stock exchange. What is stock exchange? Stock exchange is just a centralized platform where the stocks are bought and sold. Similarly, exchange traded funds are also traded on the stock exchange. But if we talk about the mutual fund, then it is not traded on the stock exchange, but it is buy and sell, bought or sold at the end of trading day. At the end of trading day, based on the fund NAV. It means what the fund's net asset value, it is decided first, and thereafter mutual fund at the end of the trading day buy or sell the main investor's stock. So in simple word, these are the two terms that are different from the point of view of trading, just because ETF is traded on the stock exchange and the another one is bought and sold at the end of the trading day. Further, the base of difference is pricing. What is the difference between these two terms on the basis of pricing? As we talk about the ETF, then the price is determined just on the basis of demand and supply of stock exchange. It means what the stock exchanges demand or what the supply on the stock exchange, it generally affect the exchange traded fund, because exchange traded fund is traded on the stock exchange, right? Similarly, the price will be affected. But if we talk about the mutual fund, then there is a no price. Then because here is the NAV, because here is the net asset value which you have to be calculated, and it is calculated just on the basis of underlying asset. And what is underlying asset? It is just called a derivative. Because of these derivatives or a underlying asset value, you have to determine the NAV, and thereafter mutual fund is calculated easily. Mutual fund decide the NAV easily. So on the basis of pricing, NAV of mutual fund is decided on the basis of underlying asset, and ETF will be decided or determine their prices just on the basis of supply and demand on the stock exchange. So similarly, go for expenses purpose. If we talk about the difference between these two terms on the basis of expenses, then ETF is much lower expense ratio than mutual fund. Why? Just the simple reason is that mutual fund is not providing the more cost effective options, but the effective cost options are provided by ETF. Just the effective cost option is provided by ETF is sufficient for the base of lower expense ratio? No, sir. When we go for the exchange traded fund, it provides you the trade with no management fees. It helps in giving you the diversification of portfolios just without the fees of operational cost. So similarly, these two costs are not in the exchange traded funds, and that's why it is providing the low cost effective options and lower expense ratio. So as compared to these two terms, ETF is much lower expense ratio than mutual fund. So these are the two differences as well. Another one is diversification. You all know that the both funds are providing the diversification purpose. But if we talk about exchange trade fund, then it may track only the particular index, or just to focus on the specific sector. It means it diversify and just focus on the particular index or the specific sector. But if we talk about the mutual fund, then it provide you the diversification of the wide range of selection. Then you have a more and more options, because in today's time mutual fund is more vasting and provide the best rate of options as well. And the last one point you have to define in the difference between these two terms is liquidity. Why the ETF have more liquidity? Just because of two reasons: because it is not connected to trading volume, day trading volume, and the another one is its liquidity is just based on the stock options, individual stock option. It means these are the two major reasons that that provides the ETFs more liquid, but mutual funds are less liquid than ETF, just because of these two reasons are lacking in the mutual fund. So this is the two different this is the difference of these two terms on the basis of liquidity as well. So I hope these are the five differences which you have to be kept in mind while understanding the terms ETF and mutual fund and their differences as well. So friends, this is all about today's video. I hope you all will be satisfied with that answer and very well know about that answer, how to write this answer, and how to get the good marks in the exam. So if you like this video and if you understand the answers very easily, so please hit the like button. Thank you so much. Have a nice day.